Chintan Haria. He's fund manager and head product development and strategy at ICICI Approved AMC. Joins us right now on the show. Chintan, good having you.
Hi.
Thanks for joining in. And your first time on ET now.
First time. Yes.
So great having you on
me.
here. No, thanks for joining in. What have you been doing? Shopping in the market?
Yes, whenever the markets fall, we love to shop, and whenever the markets go up, we love to book profits. So that's held us in good stead.
And you've been shopping the last
15 we have, days. Especially in the large cap space. If you look at it, there has been significant amount of correction in many of the stocks. Telecom is one sector, classic sector, where it's a consumer-facing sector, but its valuations are probably trading like infrastructure. So that's one sector where we've shopped a lot. And if you look at even IT and pharma in a big way, so these are so-called defensive bets, which for the last 2 years, because of sector-specific reasons, have actually corrected. So IT, pharma, telecom is 3 sectors where we've increased significantly our exposure, and we like them. And if you look at even the infrastructure space going ahead, given that the solvent leveraged companies in the infrastructure space, with the government investment going up significantly, they should also benefit. So these are the 4 spaces where we see significant amount of interest, and we are adding into that.
But about the correction, Chintan, does it seem like we're done with the major part of the pain, or do you sense that, again, this rebound which is currently playing out, and again, we're likely to go back to those previous low levels, and we could see another wave of sell-off coming?
So I guess the sell-off for the first time in the mid and small cap space was aggravated in the last 3 years. So the last 1 month, I think the small cap index is down 15%. We haven't seen that kind of fall in the last 3 years in the small and mid cap space. To that extent, I'm still a bit cautious on the small and mid cap space, because if you look at 2013, the small and mid cap space was at a discount to the large cap valuations. Today, the small and mid cap PE is about 50% premium. The major reason for small and mid cap doing well is that 70% of our market is large cap, 30% is the small and mid cap space. If you see our $2 trillion market cap, roughly that's about $600 billion in the small and mid cap space, and just about $200 billion in the free float for that. So that's a very small amount which is there as far as the availability of liquidity in small and mid cap. And when so much domestic liquidity, you refer to domestic liquidity, back of the envelope calculation at $500 billion saving every year, we have $25 billion coming into equity with just 5% allocation to equities. That itself is ensuring that we have not seen a significant fall and domestic money continues. We've also seen a good trend wherein whenever the markets are actually falling, we in mutual funds are seeing good amount of inflows. I go back to 2007-8, whenever the markets, or 2008 specifically, whenever the markets were falling, there was significant amount of redemptions in mutual funds. So we were forced to sell when the markets were actually falling.
That's changed.
That's changed. The investors have actually become very, very smart in terms of how they are investing.
So since currency demonetization, you're saying allocations have increased?
Yes. So we've seen allocations continue to come to equities, and redemptions have actually come down. Okay. So if you look at the mutual fund industry, October was a month where the redemptions were there. So net inflows were there, but redemptions were ensuring that the net inflows weren't as high. In November, the redemptions have come down significantly. So when the markets fall, we don't see redemptions, and that's actually one of the key differences between 2008 and now, where the domestic investor, who is now, we are a potent force, right? I mean, if you look at equity mutual funds, they're getting about 1 lakh crores every year. I mean, if you look at the 2 or 3 large AMCs, the AUMs which we carry, I mean, we have about 75,000 crores in equity. That is far higher than what we had in 2008 relative to FIIs. So we will probably keep on becoming more and more relevant, and FIIs inflows and outflows to an extent will impact momentarily, but will not have a long-term impact.
So after how much correction in the broader markets, the mid and the small caps from here, would you be a buyer? Because up until now, you said you've only been shopping in the large caps.
Yes. So it's very stock specific. So in mid and small cap, obviously you will always find pockets of value.
Yeah,
but
absolutely.
On a broader sense, I would believe that if large cap and mid cap valuations come to similarity, or maybe, so right now the premium is 50%. If the premium maybe shrinks to 10 or 20%, maybe we will have a look at it. So for that, either the large caps have to go up, or the mid caps have to go up.
What do you think will happen?
I hope the large caps go up so that we bought them. Yes, but I hope the large caps go up.
What does the head say? That's the heart hoping for it.
The head says that there is pain in mid and small cap which can come over the next 3 years sometime. Liquidity and flows over the next 3 years sometime we can see a fall, because we don't know. Liquidity and flows is something which we can't predict. If the flows of liquidity continues to remain domestically strong, then we may not see a correction in mid and small cap the way we are seeing, or we may not see a valuation correction, we may see a time correction in that.
So for now, you're saying the demonetization shock has been absorbed by the market, large part of the pain.
So in terms of the price, yes. and we've seen price rise from the day. So we actually hit the low of the Brexit day, and then we've handsomely reversed. But in terms of the numbers, when the December numbers come and when the March numbers come, we will definitely see some amount of pain in especially the home improvement segment, maybe the cement numbers. So that will have to get, in some sense, adjusted, or that will have to get replaced by government spending in infrastructures plus cement, to ensure that there is some amount of uptick there. Otherwise, we will see probably reduction in IIP, reduction in GDP to an extent, and that will create a base for a stronger FY18, FY19, which anyways is the case wherein we are believing that FY19 is going to be the strongest earnings year as far as India is concerned, and that should coincide with our markets doing reasonably well.
Did it change? Was it earlier FY18 and now it's become FY19?
No, it was still FY19, but yes, the base is now lower.
No,
so the FY17 base is much lower, and hence on a 2-year basis, FY19 will start looking much better.
Okay. Now, two questions. One of them on the spaces that you mentioned. I want to single out telecom. What happens here? Because that's a space, as you said, consumer facing, but trading at industrial valuations. The problem, of course, remains the debt, right? And a large competitive player coming in arguably at the end of December.
So we believe that a sector, whenever the worst news is there, when there's competition and the valuations are correcting, it is the best time to buy that sector. And if you look at the prices of the telecom companies today, in fact, if you look at the spend that we have on telecom, that itself is so minuscule that none of us bother about our telephone bills, right? So even if the smallest, our ARPU is hardly 150 rupees, that's probably 50% of the cost of a pizza. So every month people spend 150, that can easily go to 250. And with data usage in India picking up significantly, I believe that incumbents also have a strong business case. The larger incumbents will survive, the smaller incumbents probably will get absorbed in consolidation. So there is a chance.
So there are three, right?
So there is a chance. I mean, there are many. So then some are listed, some are not. But I'm saying across. So if you look at the cash flow generation capability of these. So while you spoke of debt, the debt is essentially because of spectrum auctions, and spectrum auctions in the past have led to their balance sheets. So 2008, most of them are 2008-9. The telecom companies were deleveraged. Their balance sheets were clean. Post that, the government obviously took out a lot of money in terms of spectrum from the telecom sector, and hence the debt lies. But we cannot take away the cash flow generating capability and the cash flows which are very strong. So on a cash flow basis, the telecom companies look excellent, similar to the IT companies which look very good on cash flow basis.
What's the view on banks now, and especially given the weekend move of the Reserve Bank on CIRR? Earnings are bound to get impacted, and considering they're just such a large weightage of the market and the index per se, what is your exposure to banks now?
So our exposure to, in fact, we were very constructive in banks since February when the banks had corrected, even the private sector. But today, clearly, if you look at banking, with interest rates coming down, and over the next 2 years, the capex cycle will improve. So there are two things which are happening in banking. One is there was an NPA write-off cycle, which probably we are at the fag end of that. And we've seen a credit growth which is as low for the last, I think, 2 decade low.
But there are newer problems
two decade
now.
low. So the newer problems aren't problems as we see it. I mean, everything is adjusted. Everything. I mean, so the excess liquidity is all what's been absorbed, and even still there is more liquidity. So in general, if you look at banking as a sector, the private sector banks which have a 26% share today, and will only see a share increase from the public sector. We believe that is a good space. Public sector as a tactical call, because of falling interest rates, they'll report good numbers and yields, but we are not sure about their balance sheets yet. So as tactical plays, when public sector becomes very cheap, PSU banks, it is fine. But otherwise, as a core portfolio, the private sector will still continue to be our favorites.
Okay, we time for one last question. Just one quick thought on mid caps and small caps, which until 3 months ago, we were talking about revenue numbers multiplying 1x, 2x, 3x over the next 2 years, 3 years. Those will probably see investor interest coming back at some time. What is your favorite theme out there? You've given us your thoughts on the large caps. What is the favorite mid cap theme?
So as far as favorite mid cap theme, there's no argument against the fact that Indian consumption story is strong. Indian consumption is going to grow up at $1,550, $1,600 GDP. Wherever a country has gone higher than that, be it Japan 40 years back, be it China 12 years back, there's been a J curve as far as the consumption growth is concerned. So I would believe that those consumption stories which have clean management, have got good balance sheets, and have got good growth potential are something which we would like. And obviously the valuations have to be something reasonable.
What sectors do these companies fall in?
I think the home improvement sector, because of the demonetization, will see a valuation correction, and that probably some of the stocks in that space will give you a good entry point over the next 2 to 3 months once the results
Good
come.
news for
Home
Nakul, yeah?
improvement.
Or everybody in the interior decoration, home improvement, architecture space will
Yeah.
probably see benefits coming in.
Yeah, hopefully. Some time to come, but eventually, yes.
Because
it will
they'll
happen.
also benefit from getting inclusion. So a large part of the home improvement sector was not part of the mainstream.
Right.
Now with this GST coming in and this demonetization, there is no choice but for to come in mainstream, and that will actually add to the GDP growth probably over the next 2 years. So
But are you talking about the larger umbrella? I mean, the cements, the
paints, the cements,
paints,
the plywoods,
etc.?
all of it, the tiles, everything. So we'll see a large part of India coming into mainstream, and that adds to the GDP growth significantly.
Chintan, it is so good having you today.
Thank you so much.
Thank you so much for taking
Thank
the
you.
time out. Look
Thank
forward to have you more often on the
Sure.
forum though.
Thank you so much.
Yeah.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.